A million questions. Do commodities hedge against inflation? In this video, we show the findings from the recent research by Liu, Zhang, and Zhou, 2023. First, we need to understand four terms used throughout the research. 1. Futures. Futures are a type of financial derivative in which you agree to buy or sell a certain asset at a certain price at a particular time in the future. 2. Commodities. Commodities are a type of asset representing fungible goods, such as oil, iron ore, or wheat. Commodities are usually traded using futures. 3. Great Moderation. The Great Moderation is the name given to the period of declined macroeconomic volatility experienced in the United States from the mid-1980s to the financial crisis in 2007. The Great Moderation can be summed up as a multi-decade period of low inflation and positive economic growth. 4. Hedge. A hedge is an investment that is made with the intention of reducing the risk of adverse price movements in an asset. Now, about Liu et al. 2023. To describe the evolving characteristics of the long-run inflation hedging qualities of commodity futures, Liu et al. 2023 use an MS-VECM technique. The authors show that throughout a sample period from January 1983 to December 2021, not all commodity futures are effective at protecting against US inflation. They find that the best inflation hedges are commodity futures traded on the markets for industrial metals. The majority of the actual inflation hedging is acquired during the Great Moderation, the post-subprime crisis, and the periods following the onset of the COVID-19 crisis, which are considerably longer and more prevalent regimes. Additionally, the research demonstrates that precious metals can reduce the danger of inflation, albeit less effectively than industrial metals. On the other hand, energy, agricultural, and livestock subindexes do not appear to have a strong potential to hedge inflation. Their findings imply that when inflation is on the rise, investors who keep industrial metals are compensated for the losses brought on by negative bond returns. In summary, only industrial metals and precious metals exhibit the ability to hedge against inflation, according to historical evidence. Industrial metals should be thought of as alternate possibilities to precious metals for a well-diversified investment portfolio. Do you think metals can hedge against inflation? Like, share and comment.